I'm kidding. What? Okay, so looking at these things, we're looking at a couple different things. Realistically, the big thing is consolidation, liquidity dynamics, Uber-Fibs. So a little bit over into the consolidation stuff. You know how we talked about with the other kind of like more formal class, we talked about like the W patterns, right, and the M patterns. And realistically, what you're doing with these things is you're seeing rally base drop, consolidation base, base, whatever you want to call it. It's all the same thing. But once you start putting this into perspective of looking at the charts, it's like, well, this up move didn't just go like this, right? Because lower time frame, you had all the sideways structure. So what are you actually seeing? Well, you saw this consolidation, basing move, that continued into the rally, basing, popped up, liquidity, base, pop up, base, and then continuation move, right? So the reason we're using that kind of like consolidation to kind of look at it from a higher time frame is to look at it from not just a perspective of the price, but also in liquidity. And this is where, liquidations comes into play. Let me see if I can get this thing to fire up. I've had issues trying to load this thing on Coinbase. Let me just try something. We'll just do that. It's probably easier. So it's not just specific to the liquidations tool. Yeah, it's super helpful to see where the liquidity is, but at the same time, it also gives you the perspective of understanding why is there stuff there. And there's a couple ways we look at it. Volume, just looking at volume as a metric is a good way to see that as well. The big thing here is saying, like, what have we done as far as like breaking structure? What liquidity have we taken? Have we taken all the major liquidity that was above us? Yes. Where's the next pocket? Well, we have to take, if we break into the new high, where are we going? We're going to 27K. And then we have some like much to the left structure where we're going to see some kind of maybe a little quick rejection or something like that. But to the downside, do we have any major liquidity pockets to the downside, even on the 4-hour? No. The major liquidity pockets would have to be breaking us back into 20K again or lower. Under 20K, there's quite a bit of stuff going back in here, but most people miss the move, if you remember. Right? So realistically, what are we looking at? And the reason we don't have an infinite look back on this thing is this is the change that we're seeing locally is that, hey, what would we have to break here to make us lose levels? Well, let's look at it from the perspective of volume as well. This is kind of understanding the dynamics of liquidity. Lots of bearish liquidity volume, like downside volume here, people trying to short stuff. That caused the stop. Right? When there's a massive increase in volume and it's all bearish, guess what? Price is going to start reversing because everyone's getting a free ride. Nobody gets a free ride, otherwise you get off the damn bus. So what happens then? We go to the next spot. We do a higher low. We gain the weekly open. That starts breaking some levels. We have a thick level of liquidations from both mid and high leverage that breaks us into the upside structure. Why did we go all to this new high just to break down to this previous high? Because that's where we are. Look at all the liquidity we had. We grabbed all of the local liquidity, right? This entire move, all we did, we took all the liquidity from the downside, everything down to the 5Xs with this downside move in the structure from the highs, and then what did we do back to the upside? We grabbed all the people trying to short, and had been shorting all the way through the end of February. And this is the dynamics of understanding why and where. So realistically, when you're looking on this, liquidity and understanding where people are getting filled, you need to be looking at order flow or at the order books on fills, on fill of order, not on depth, not on potential positions, right? Like, I show trading light and the depth of position. That's fine. It gives you an idea, but unless that money is filled, unless the order is placed and actioned, it doesn't mean shit. Realistically, because a lot of those things are just pulled. And in crypto, there's a term called spoofing that you guys should be aware of, and that's very popular to do. Because basically, you're just like spamming a fake price. The market reacts, and then it has to react against it since you basically cut the chain of orders as it goes through. It's completely illegal in traditional markets, and they're very regulated against it. In crypto and crypto exchanges, it still happens a lot. So. Not to go too far off a tangent on that, spoofing, Google it. It's worth 10 minutes of your time to realize what it is and the fact that it is being done constantly. So with the liquidity and as we understand it, what do we see here? A massive spike in volume as price driven to the upside, right? Lower volume going down, higher volume going up. This is good. This is showing a deviation from downside volume. But what are we seeing now? Are we seeing high volume or low volume in this zone? Much lower volume on average. Bitcoin dominance, like the average volume in this zone, has significantly increased in this area as compared to even like we're at levels higher than we did the upside move. So this is very significant price action, very significant volume, and that's what really helps us kind of tell like where's the priority of the move. Well, the volume moves are going up. That's what we need to think about. The volume move that went down, there was higher volume in buying, right? When we were saying buy, this was one of the reasons like Will and I were saying buy in this zone at like 19.8 because we were like, hey, the volume's changing dramatically. We've taken all of the liquidity locally. There's nothing left to grab. We'd have to collapse back into the yearly open or some of these downside structure pieces to get any major more liquidity. So the understanding of why that happens is, yes, you have massive spikes in volume, you have grabbing of downside liquidity, and higher low reversal structure. There's a lot of things that went into why that was the bottom, and that's why we called it last week. We said 19.8, it looks like a buy, because of this. Very spiking high short volume that ends with a very strong bullish volume. So that's an easy way just to kind of look at it from that perspective. You can also start looking at it from like a VRVP, right? We're still working on the volume delta one that we are planning to come out with, the indicator, which is a little bit scary because it combines volume, VRVP, and it actually pulls sources. So it's almost like order flow volume for exchanges. It's getting pretty nuts, and we're actually able to pull those from exchanges. So we'll keep you posted on that, but that's going to be a big game changer strategy-wise for us, because right now I'm doing this in my head instead of seeing it on the chart, right? So with that, you see the liquidity. All that we do with these kind of types of things is you see where are people, if price is falling and people are shorting, right? Volume's going up. What does that tell you? This is an easy thing to learn, but it's a really important thing. If we have a downside price action, increased short volume, that's what the gray is because it's bearish, the white is bullish, just like our candles, right? What does that tell you? It means everyone's shorting. The volume is shorting. Why is that important? Because from any low that we create, if there's increase in volume bullishly and we gain levels, that means everyone who shorted the shit out of this with high volume is what? They're out of position the moment we break it back above the level that it started in, right? The moment this happened, like we can from a high time frame to low time frame, you can see that all of these people who were shorting this were out of position. And what does that mean, right? If you're shorting and price is above you, you're out of position. That's what the term means. Or if you're longing and the price is below you, you're out of position. And you trapped millions and millions and millions and millions of shorts, and you did it over the course of 2 weeks. Some guys were getting free rides all the way down, probably made some good profits. What's happening in this upside move? Do you think people in shorts are just going to be like, no, I don't want to take profit, I'm just going to hold it forever? A lot of them do. That's why most people lose money. And at the same time that this is happening, people are longing, people are taking profit. What's the effect of a take profit if you're in a short? It's the same effect as entering a trade for the same value of the take profit. So if you're short from 100 here and you exit the trade here, it's the same as if here the price goes up by 100, right? Because you have to buy to get out of a short, a sell. That's the way the market works. And as people are getting liquidated, as people are taking profit on shorts, as people are exiting positions in shorts and adding to longs, that causes these high time frame reversals. And that's what we saw. And what goes with it? The liquidity goes with it. We grabbed all of the liquidations that we built to the upside. They're gone. They're done. And that's awesome for us because now we see exactly how that works. I'm going to go about 12-hour just because the daily doesn't show enough data for the liquidations. So that's a way of looking at it from the volume as well. Spikes in volume, high increase in volume comparatively to previous levels. What did this upside move, even on the 12-hour do? That was sold back down. We grabbed most of it, right? That's why we went where we went. We grabbed most of it. We couldn't quite break into the 26.5. But again, this is much lower leverage. All the big leverage is taken out. If they start farming out some sideways and they grind it all the way back down to 23, there's a bigger probability that we can start grabbing this stuff. The problem is this upside move happened so fast that the only real longs are the ones that we took, right? The people trying to long up here, if we look at it from a perspective of, well, if we just do one of these, what we call an under-over, we go under and then go back up, what do we end up doing? We test structure, we regain important levels, and we have a continuation move as people try to short. And this is why these structures play out, right? We've made the new high. Nothing has really changed in the overall structure, and we grabbed all the liquidity. Now we need to go sideways and farm liquidity. That's usually how this thing shakes out. It's usually what happens. So that's a little bit of the dynamics of liquidity. And again, I mentioned it on the normal stream. One of the hardest things to deal with in this is, hey, if I take a position and it stops me out, right? If I took a long in here, right, and I put my stop loss at break even and it stops me out again, but then it higher lows it. It doesn't invalidate the longs, right? These liquidity grabs happen for a reason. And this is why, for me, I'd rather get stopped out of a trade by front running it, by putting my stop loss before the low of the wick, because if it breaks it, there's a higher chance that we could be in a liquidation slide, right? Where price just goes against you and you get out at a major loss. Because even if you have your stop loss wherever it is, and if you're marketing out, it'll take you, the marketing effectively says, hey, exchange, get me out of this at the best possible price. Just get me out. So that if you get marketed out, who's ever had that happen? I'm sure a bunch of you guys have, where you put your stop loss there, but it actually took you out much lower because the volume's dumping. It happens because of that reason, but you still have to use the market to get out of the position. I try to avoid it by front running it because I'd rather get stopped out real quick and then re-enter a trade, since I basically was the liquidity for someone else's fills. So that's the way I look at that as far as like the liquidity of it, and that's the simple thing of using this, which is, hey, if I'm trying to short, or let's say I'm trying to long, right, and I'm looking for my little W pattern, right, and it gives me the higher low. So that comes down, test the structure, but what about this wick that goes all the way down, but then it closes back above the level? That's a fill. That's a high time frame fill in liquidity. If it does something like that on like the 4 hour or the daily, that's what that is. That's a liquidity grab. Somebody is trying to fill orders below the previous low. We've created new lows, but now that we've gone up, what are you looking for after that? A lower time frame, higher low, right? We were looking for the swing fail because that's what it is, right? The swing is swinging back to the downside. We're looking for the failure. We were looking for this to hold, right, to give us the swing fail because it failed to make a new low. And then they wick it to the downside, they fill their orders, and then close it back above the previous level. The only easy way to play that is to either A, try and long out in the ether, which is never a good idea, because if you're not able to affect the markets, if you can't put 7-8 mil on like a very high leverage to be able to, affect the markets very significantly, then what are you really doing? Well, you're basically waiting for confirmation that happens. So when that happens, it's really simple. I drop it down to a lower time frame, and I look for, if that's a liquidity grab, what am I looking for? I'm looking for the higher low. I like the 15 minute or the 3 minute. I don't like the 15 right now, but I do. I don't trade it a lot. I usually trade like much lower if I'm scalping, but either way, drop it down to a lower time frame, and you look for the same pattern here once you've gained the level back higher time frame. So that's a little liquidity dynamics thing. I'll go into the Uber fib stuff, which is cool because then we can talk about our consolidation zones. Any questions on that, or is that kind of clear? Somewhat. I'll turn volume off and put this back on so I don't lose my levels. And what is it? XBT? Yeah, okay. I'll just remove those. So, fibs, Uber fibs, right? They're pretty freaking cool. We all know this. We're all pretty happy with it. What we're looking at in the Uber fibs, like I had a local one here, right? With the different levels, we've talked about why this works and how it works. The big thing that I look at, especially when I pull a new one, is I'm looking at two things. What am I using? The actual Fibonacci of doubling, right? This is for macro, higher time frame. When I'm looking at lower time frames, I can either do every single one, or in crypto, multiples of 4 works very effectively. So 1, 4, 8, 12, 16, highly effective from the low that we currently did, right? From this low, what do we see? Every gain of level took us higher. Failed, went above, looked fine, bearish retest, failed. Failed to get above, back down, hit some higher time frame levels, regained the 12, started the major move up. So what does this kind of tell you from that perspective? Where are we at now? Where are we at rejecting wise? Well, we're basically at the stuff that we want to gain back, right? We're at the level to hold here. If we start losing and bearishly retesting this level, what's the expectation? We come back down to the previous level, not the middle one. That's still possible. We still bounce here. It's not impossible. It just tells you kind of like a perspective of where I expect price to go. And I pulled this thing a long time ago, or at the start of the move. And the fact that it's still reacted tells me two things. A, it's still effective, and B, those are the right levels from those multiples. So from that, I'll just leave that on for a second so people will screenshot it or whatever. That's just the multiples of 4 that I use, going all the way up to 80, I guess. With the higher time frame moves, it's also very simple. Like, I'm on log. You need to make sure the fib level's based on log scale. This is something that I hadn't seen before or used since they updated it in the last couple of months. So using fib levels, I would say it's important, or pretty significantly important if you're on log. It will change significantly the placement of the different positions. A lot of times you'll see similarities, but it won't be as accurate. So my objection there is to basically say, use whatever is the most effective on chart. So this still works. The fibs off of log still work, right? It's not as well. So test it. If it doesn't give you good positions, if it doesn't give you the best levels, then don't do it. But if it does give you good levels, then make sure that you're. Why is it not letting me change it now? Oh, because I'm not on log. There you go. See which one works out best, right? That's my recommendation. So how do we follow the levels, and how do we build consolidation zones, or zones in general? So there's two kind of thought processes behind this. Which, yeah, I mean, it's literally perspective most of the way. I'll take this box and I'll hide it real quick, and I'll do the macro one from the high. So this is the easiest way to do it, right? The easiest way to do it, you're looking for the major high or the major low. This is the major high. This is the overall high time frame high, right? That's the high. I'm on the daily right now. I might have to go to a lower time frame, but we're looking for the first swing fail from the high. That's the low. That's the lower high. The reason these are effective is because we pull the Fibonacci from the loss of level, because that's the confirmation of the start of the down move. Even though it's low time, it's not as significant as, say, this, right? When we lost that and then bearishly retested, that's the start of it. Before we even knew it was the total failure. So again, to the downside, I'm just pulling it like this. Not super effective. Why? Probably because I need to go on the 4-hour. The 4-hour, if you're on the daily and you're looking at the overall high, go to a lower time frame to see if you can see the smaller higher low. All right, that's a more macro one. The other one you could potentially pull would be from there to there. Right? Still perspective. Yeah, I'd say it works. Normal fibs, 0 to 256. 256 is usually the move. That's usually the move done. Why was this such an important level to hold? Well, if we started losing that, it was kind of like pretty much wrecked going to the downside. Again, you need to be aware that the fib levels are on log. It does change the price. It does change the effectiveness. And when you have it on log and it matches, it's pretty ridiculous. What's the next major level to gain? 31. If we gain that, where are we going? What we talked about for a while, 45, 46. I think we said 46 because of that. But yeah, that's the expectation. And this is why they're powerful, because it gives you a perspective of looking at a confluence of levels. So I'll go ahead and put this back to the multiple of 4. It's on log. That makes much more sense. There you go. All the levels to the dot. I like it. What do we have in the other level we had? We pulled from the low to the high. And this is where you could start building your consolidation zones. I'm going to change the color on this one to bright red. Where are the important levels that you see? Probably the levels that are overlapping, right? Now, this is a little bit more perfect than I expected it to be. I'll be honest about that, because I was not expecting it to, give us literal overlap levels, to the dot. But it tells you now, the fact that these are overlapping that powerfully from the low to the high, that these are the levels that are important. And the way you then plot these is you look at the levels, and you do this on any chart, and that's your consolidation zone. I'll just change it. I think we have one called gray box. No, it's there. You go. Okay, so get it as accurate as you can, because then it'll give you a better perspective. So what's the next level up? We have this thing. What's the level we don't want to lose? Probably that. And the reason we're creating these little zones, these little boxes, because now it's telling us hey, these things are probably the most effective levels on the entire chart, as far as gaining, losing, failing. Next level. Yep, and we can get rid of these boxes. And then we turn off and get rid of the horizontal rays, and then turn off our fibs. And what are we left with? Arguably the most accurate levels you could possibly have for finding Fibonacci price projection. And these now become the main parts of what you're looking to gain or lose. You can just turn that off real quick. And that's your major levels. Now, if you want, you can go back and just draw lines so you actually have them plotted the actual levels. But when they're that significant, it tells me everything I need to know about the structure, right? Is there any questions about how to pull? I can do a couple more exercises to show that entire thing. So I did some bearish ones. I had one bullish already made. I'll go down to the 1 hour since it's local. Where's the low? Right? You find the low. Where's the high after the low? Where's the higher low? That. So where do you pull from? Does it play out? Play out? Yes, it does. Always does. Not always. Sometimes you get bad ones. It just happens that way. But there, that's the in and out of it. So all you're looking to do, again, was that the start of the local move? Yeah, we can arguably say that with pretty good confidence. What happens if we gain that level? Takes us back up to some higher time frame stuff. High time frame levels, from the low that's in now to the high, 22.3, 31.7. These are the major levels that we're looking at. 26.6, we're literally tapped and then moved away. Lower time frame on the current structure that we have, does that still play out? Yeah, I mean, even looking to the left, it looks pretty decent. So from here, we can also just adjust it and make it. You can even use the individual ones, 1, 2, 3, 4, 5. I find that to be less effective unless you're scalping. And if you're scalping, then you need to be really, local levels, loss, regain a level, continuation, right? So a little bit less effective. You can still use it, still see it. I like the multiples of 4 the best, or just using like the fibs themselves, because it telegraphs where you want to go. Right? What happens if you gain that? You'll see some consolidation, some resistance, higher time frame before we go up much higher. Right? Any questions on that? I know it's a lot, and it's a pretty new thing for a lot of guys who haven't seen it before. There are a few people who haven't seen it. Any questions on the Uber Fib stuff? Again, playing around with this a lot. The fib's not on, based on log or not. It does affect the price. Like I didn't have them on there, and it was still pretty accurate because it was a very local one. If I put the fibs on log, again, you need to double check for accuracy. Are they more effective or less effective? Yeah, I'd say it's pretty decent as far as effectiveness, and they actually line up a little bit better too with the other high time frame levels, right? But again, lower time frame is not the same as higher time frame. This is a lower time frame move. You're looking to take these things from expansion, catching as much as you can until it rejects and goes lower. And it will eventually. I'm sure of that, like most things will. So at the end of the day, it's a way of being able to price project stuff. There was one, maybe it was BNB. I don't remember. It might have been BNB. Yeah, it was BNB. So the price projection modeling that we did from this, the start of the move that happened with COVID, again, it literally went straight to the full expansion to 256 before failing and rejecting. And where is it at now? BNB, from its major move, this is the highest time frame one we have on this. Where is it going? 128, 618. We can use this stuff, right? We can say, like, what's the major flip a level? Like, to break us back into this higher range, potentially going into at least the midpoint of the range, right? This is what's near enough. There's, April Q2, there's some structure above the test. So what do we say? What's important here? It's like, well, yeah, flipping that level is pretty significant in the overall structure. That was the resistance. It was flipped, became support, 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 resistance, resistance, fake breakout, retest of structure of levels, failure back down. So that's all we're trying to do, is give us like an extra boost of where it's going. And you can use these. These things are most effective. We're going to be using these a lot going into the next bull run, right? That's the big thing, because then we're looking at structure that's played out all of this previous crap that it's done the higher low. It's had this little like wick out structure, maybe from the whatever cycle it's on, and then you're looking at which ones have a high expansion percentage. And yeah, 256 the end of the move for most of these things. So it's the way it is. There you go. 300 is literally the 8. Any questions? Or is it mostly just, yeah, we've seen it before, it looks cool? Oh, what's up? Yeah, 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 of course. So
Yeah,
the
but
biggest
overall,
thing, what's that?
overall, is it clear?
Yeah, yeah. Again, like a lot of these things, it's a change. It's a different thing. It's a different way to look at stuff and structure and tests and whatnot. Um, so can we do it to the local one? Yeah. High, low, right? To play out Not super clean. Somewhat. I'd be more interested, honestly, in the local one that we're doing it here. It's the low. It's the high after the low. That's the higher low. Is that playing out? Yeah, to some degree. And you use these levels in confluence with other stuff. Do these levels stack up with, swing tests? Yes. Do these levels lack, with other higher time frame levels? Yeah. That's the way to use it the most effectively. With the low time frame scalps, you can use it just like the normal to 23 levels, or each one's a level, each individual 1, 2, 3, 4, 5, 6. And it gives you a pretty decent perspective of like what's going on in the price action. What's the gain you want to see? 25K. Why? Because 25K takes you back to there. What does 25.2 take you to? 25.2 takes you up to test at least the mid of the next one, potentially higher. But almost all of them look the same. See these real quick. High. Low after the high. There's that. Not super clean. Don't like it. Right? What's the next level? Or excuse me. There you go. Then it plays out. Plays out now. Right? To the dot. Because we found the right one. On the 15-minute, that's the high. It's the low after the high. That's the lower high overall from that high. And there you go. Now you've got your levels plotted. I used to think this was all hocus pocus nonsense until I saw it playing out on a high time frame in like the last bull market. So your major projections. This is like the scalping guide levels, basically, for a lot of these levels. To play out the whole move, yeah, for the most part. So even if we're playing the local stuff, right? Let's do it from the local one to the upside. Let's change this color to red. Where do we have overlap a level? Should see a bunch. I'm going to change these. I'm going to change these to the multiples of 4. And then change these to multiples of... Oh, sorry. Change these to multiples of 4. What does this tell us now? It tells us some major confluence zones. That high is the high that takes us to the next level. So even in the local structure, what's the level you don't want to lose, right? That's a pretty major level. When there's overlap, what can we use? We can use our little boxes. Right? Does that make sense in the structure? Yeah. And now you've got some plotted levels that most people won't ever see. You see the major supply and demand flips. Because that's really what you're seeing when these gain or loss of levels. And you'll have these fake outs that are nasty. But again, the regains of structure are good. Fake outs are nasty. Regains are good. Does it overlap with anything we have? Yeah. High time frame levels. They work too. Now if we put our major stuff back on. Swing. Swing. Rejection at the local swing. What's the major gain? Gaining the weekly SR, gaining that box. That's what takes us higher. And that's all I'm doing on like when I chart on myself, right? As I'm doing these, I'm doing my levels, I'm doing my weeklies, I'm just saying if this then that. I want to see a bounce here, which we did. If we lose this, right? If we lose 16, I want to see this. Why? Because it bounces, tests the structure we need to test, bearishly backtests the level that we lost, and then goes to the level that's untested. Potentially lower. Or it just does the whole thing in one shot once it loses it. That can happen too. So a lot of times you'll miss the major pumps, the major dumps, just because we don't have confirmation. And it's really simple. Do you want confirmation in trades? Yes or no? Yes. If yes, you will miss moves. That's the reality of it. Unfortunately. But the best trades are usually the ones I feel a little bit uncomfortable in, but everything's lining up. But I just have that gut feeling that I'm a little uncomfortable. Any questions on this stuff? I know it's a bit of a different type of thing that we're looking at. That or the liquidity stuff or anything like that. No, just happy. Everyone's just making money. I should just stop doing these things.
No, please, no.
No, it's
No, it's clear,
it's good.
and it's really awesome as well to have some fireside like this in a while. It's fine.
Oh, let me just check the chat. I was missing the chat from yesterday. Oh yeah, I was looking. I didn't see that you posted that. I don't know what trading light looks like since I'm here. But that Egil, that's really it. You can kind of cut it there. I'm just gonna kind of shoot the shit. Or maybe he's gone. Okay. I'm just gonna change over to trading light. Yeah, sure.